The world is watching as Credit Suisse is making headlines for all the wrong reasons. Its stocks have plummeted over the years, and its headquarters in Zurich is shrouded in uncertainty. But the question on everyone's mind is, will Credit Suisse collapse, or is it too big to fail? Join us as we explore the dramatic rise and fall of Credit Suisse and find out what the future holds. The fall and rise of Credit Suisse have been nothing short of dramatic. With so much at stake, let's dive into the heart of the matter and uncover the truth behind the headlines. Credit Suisse's involvement in the 2008 financial crisis. Did they learn from their mistakes? The 2008 financial crisis was a defining moment in global financial history, and Credit Suisse, one of the largest Swiss banking institutions, was not immune to its effect. As mentioned, Credit Suisse saw firsthand the collapse of their fellow Swiss banking giant, UBS, which had to be bailed out by the Swiss National Bank. The crisis was caused by a combination of factors, including the subprime mortgage crisis, the collapse of Lehman Brothers, and the interconnectedness of the global financial system. In the case of Credit Suisse, their involvement in the financial crisis was primarily due to their exposure to the US subprime mortgage market. Credit Suisse was one of the many banks that invested heavily in subprime mortgage-backed securities, which turned out to be a risky investment. When the value of these securities began to decline rapidly, Credit Suisse was left with significant losses. However, Credit Suisse did take steps to mitigate their losses and recover from the crisis. One of the key actions they took was to reduce their exposure to risky assets and focus more on their core businesses. They also implemented stricter risk management practices to prevent a repeat of the mistakes that led to their losses during the crisis. Credit Suisse's surveillance scandals. Credit Suisse has been embroiled in multiple surveillance affairs over the past decade, which have significantly impacted the bank's reputation. In 2019, it was revealed that the bank had been spying on two former executives, Iqbal Khan and Peter Goerke, after they left the company to work at rival bank UBS. The surveillance operation involved hiring private investigators to track the executives' movements and monitor their communications. The scandal led to the resignation of Credit Suisse's COO Pierre, Olivier Bouy, who had authorized the surveillance without the knowledge of the bank's CEO. This was not the first time that Credit Suisse had been implicated in a surveillance scandal. In 2016, the bank was fined $16.5 million by the US Securities and Exchange Commission for providing unlawful cross-border advisory services to US clients without registering with the regulator. Credit Suisse's struggle with high-risk clients. The Archegos capital management collapsed. Credit Suisse's involvement with high-risk clients has proven to be a significant challenge for the bank. One of the most notable examples of this was their relationship with Archegos Capital Management, which collapsed in 2021. Credit Suisse was one of several banks that lent money to Archegos, a family office run by Bill Huang. When the firm faced significant losses in March 2021, Credit Suisse was left with a significant financial hit, with losses estimated to be around $5.5 billion. This loss has resulted in significant changes within the bank, including the departure of several senior executives and the implementation of stricter risk management policies. However, the Archegos scandal is not the only instance of Credit Suisse's involvement with high-risk clients resulting in significant losses. In 2016, the bank lost $2.6 billion due to their involvement with distressed debt in the US energy sector. These losses have highlighted the need for better risk management practices within the bank to prevent similar situations from occurring in the future. High turnover rate in management, an ongoing challenge for Credit Suisse. Credit Suisse has been facing a major challenge in retaining its top management. The bank has been struggling with high turnover rates, which have caused a lack of consistency and direction in its operations. With every change in leadership, the bank's strategies and goals have been altered, creating confusion among employees and stakeholders. The constant shuffling of management has also had an impact on the bank's performance. It takes time for new leaders to familiarize themselves with the bank's operations and develop effective strategies. Meanwhile, employees may feel uncertain about their roles and responsibilities, which can lead to lower morale and productivity. To address this issue, Credit Suisse needs to find a way to retain its top talent and create a stable leadership structure. This could involve offering better compensation and benefits packages, providing more opportunities for career development, and fostering a positive work culture that values and recognizes employees' contribution. Credit Suisse's too big to fail status. Credit Suisse is a massive bank that plays a crucial role in the economies it serves. However, this also means that it is designated as a systemically important financial institution. This label essentially means that the bank is too big to fail, and could have serious repercussions for the economy if it were to collapse. In the event of a crisis, the government would be under immense pressure to step in and bail out Credit Suisse. This can be seen as a burden on taxpayers and creates an incentive for the bank to take on more risk. Credit Suisse is too big to fail. Status is a double-edged sword, providing stability and security in the short term, but also placing a heavy responsibility on the government and potentially creating long-term risks. These are just some of the key factors that have contributed to Credit Suisse's precarious position. But what does the future hold for the bank? Credit Suisse faces significant challenges in the future as it navigates its path to recovery. The bank has recently announced a major overhaul of its business operations, which will involve significant cost-cutting measures and a renewed focus on more profitable business lines. The bank has also stated its intention to reduce its exposure to high-risk clients and invest in better risk management practices. However, the road to recovery for Credit Suisse will not be easy. The bank will need to regain the trust of its clients and investors and address the various issues that have plagued it in recent years. This will require a concerted effort from the bank's leadership and a long-term commitment to rebuilding its reputation. Credit Suisse and Nomura struggle after Archegos collapse and fraudulent activity. The collapse of Archegos Capital Management, a family office heavily invested in several US media companies, has led to significant losses for Credit Suisse and Nomura. The two banks were heavily involved in providing financing and prime brokerage services to Archegos, which collapsed in March 2021. Credit Suisse, in particular, has been hit hard by the collapse of Archegos. In addition to the Archegos scandal, Credit Suisse has been facing a crisis due to fraudulent activities at its asset management unit. The bank has already taken a significant hit to its earnings as a result of the scandal, and it is expected to face additional losses in the coming months. The situation at Credit Suisse has led to concerns about the bank's viability and the potential impact on the wider financial system. However, some analysts have noted that Credit Suisse is not as systemically important as some of the banks that failed during the 2008 financial crisis, and that its exposure to riskier assets is more limited. Experts weigh in on Credit Suisse's future. Mark McComb, the CEO of BlackRock Asia Pacific, believes that Credit Suisse and Nomura's struggles are due to their business models. McComb stated that the banks have been overly reliant on risky trades and have not diversified their revenue streams enough. However, some analysts believe that Credit Suisse is unlikely to suffer the same fate as Lehman Brothers. Mayra Rodriguez Valladares, a banking expert, stated in an interview with Forbes that Credit Suisse has a much stronger balance sheet than Lehman did before its collapse. Financial expert Naeem Aslam also downplayed the likelihood of a Lehman-style collapse at Credit Suisse. Aslam believes that the bank's recent troubles are significant but not life-threatening, and that Credit Suisse is likely to weather the storm and emerge as a stronger institution. Summary: Credit Suisse has been facing a series of challenges and failures in recent years, leading to concerns about the bank's long-term viability. Some of the factors contributing to these challenges include a lack of diversification in revenue streams, over-reliance on risky trades, regulatory fines, and scandals related to fraudulent activities. In addition, Credit Suisse has been hit with a number of regulatory fines in recent years, including a $600 million fine by the US Department of Justice for its role in a bribery scheme involving the government of Mozambique. Despite these challenges, some experts believe that Credit Suisse is unlikely to suffer a Lehman-style collapse. The bank has a stronger balance sheet than Lehman did before its collapse, and it is taking steps to address its weaknesses. In October 2022, the bank announced a radical restructuring plan that includes cutting 9,000 jobs and focusing on its core businesses. There are certainly parallels to be drawn between Credit Suisse's situation and the collapse of Lehman Brothers in 2008. However, experts believe that Credit Suisse's collapse is not imminent and that the bank will likely be bailed out by the Swiss government if necessary. Only time will tell if Credit Suisse can bounce back from its current troubles and once again become a titan of the financial world. Thank you for watching this video about the precarious position of Credit Suisse. What do you think the future holds for Credit Suisse? We would love to hear your thoughts and opinions in the comment section below. Don't forget to like and subscribe to stay up to date on the latest news and insights about the world of finance.